we should just accept the government can't pay its way out of this next stage. The US in the last few years has gone up to what, 7.5% government debt to GDP ratio. The US can do that, A, because it's growing above 3%, but also it's the world's reserve currency. We don't have those options in the UK, but what we do need is a really clear plan and set of priorities for the UK. And then, as we were just talking, we need to find the right way of getting the very material amount of private money, international and domestic, that is excited about investing in the UK, to invest alongside a government. And I think we can create that positive momentum in investment in jobs, in business growth, and then that will feed through into the economy. And that has to be the unlock from these 3 or 4 very systemic shocks that the UK economy has experienced in the last 16 years.
So if you put yourself in the shoes of an investor, are you hearing enough from the parties right now to make you think, right, the UK is a place I would want to invest?
So different investors have slightly different perspectives. I spent a lot of time with entrepreneurs across the UK, but also big international finance houses, whether they're pension funds or institutions looking to invest in the UK. The first thing that's consistent across them is they're looking for stability and a plan. And I think that's the first thing for a new government, which is to provide that stability and to provide thinking, which in some of these areas around infrastructure, around housing, which is kind of 10-year thinking, not shorter term thinking. So that's the first thing they're looking for. The second big theme, which is really consistent, is there are some supply side issues I was just talking about, which are getting in the way of businesses getting a return on their investments. And obviously there's been good discussion around planning, around connectivity to the grid, around skills. Those are the 3 topics that businesses always identify. And what does it mean for investors, whether it's a business or international investors? Typically they'll tell you it takes 2 to 4 times longer to get a return on your investment in the UK than it does in other countries in the world. And that's really where we need to focus.
And leaving aside the election, we should probably get at least 1, maybe even 2 interest rate cuts from the Bank of England this year. How much of a tailwind is that going to be for the economy and for businesses like Lloyds Banking Group?
Yeah, so for the economy, I think it will start to be beneficial. Of course, the short-term impact of interest rates is going to impact, first of all, the government on the cost of government debt. That'll be important. And secondly, it'll make the cost of borrowing for businesses short-term more attractive. And we've seen a really significant drop-off, as I said earlier, around business investment because the cost of borrowing and then the certainty around the future has come down. That'll be important. In terms of the impact on the broader consumer in the UK, it'll take longer to feed through. And I think what you've seen around mortgages specifically is we've just come off a decade where mortgages have been in the 1.5% to 2.5% range. The expectations the market have is that interest rates probably won't get below 3.5%. And that means mortgages, or the new normal for mortgages, will be in that 3.5% to 4.5% range, not 1.5% to 2.5%.
Now, one of the big policy ideas that's out there right now is the notion that the banks shouldn't receive full interest payments on the reserves that they hold at the Bank of England. Reform says that could raise tens of billions of pounds for the government. What's wrong with that?
In terms of the quantum of impact, there are various estimates out there, but I think the quantum of impact that's being talked about is significantly more than I think would be realistic. And so it'll be a political choice, but you really need to look at the integrity of what the Bank of England does and whether or not monetary policy works effectively in the economy.